You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 15th day of August, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first one, that's our live training room. That one is reserved for members only and those who are taking their 1-week free trial. If you've not yet taken your 1-week free trial, when Michael comes on, he'll walk you through exactly how to take the trial step by step. But you should probably wait until next Friday to take the trial, because he's going to take a few days off next week. And he runs the live training room in the morning, so it's a vacation week. But again, he'll walk you through the steps, and then you can be prepared to take action next Friday when he comes back. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the noon broadcast, which, unlike the morning broadcast, this one is open to the public. Everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways to join the afternoon broadcast live. Best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before the broadcast starts. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, so you can't join live, but you do want to get caught up later. You can do both of those via our YouTube channel. It's easy to remember. youtube.com/CFRN. It's the Christian Financial Radio Network since 2005. But you don't have to remember all that. Just youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,800 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can actually see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, You're not going to watch them all, nor do you need to. But it is a great resource to have at your fingertips, and it'll let you know we've been around a minute. youtube.com/CFRN. This is the schedule for each afternoon broadcast. So we'll dive into our daily devotional. The topic that we're on right now, we're in day 3 of 5. Walking in Victory, a 5-day journey to spiritual freedom. Today's scripture is Ephesians 6, verses 10 through 18. I'm going to share it with you from the NIV translation. Finally, be strong in the Lord and in his mighty power. Put on the full armor of God so that you can take your stand against the devil's schemes. For our struggle is not against flesh and blood, but against the rulers, against the authorities, against the powers of this dark world, and against the spiritual forces of evil in the heavenly realms. Therefore, put on the full armor of God, so that when the day of evil comes, you may be able to stand your ground. And after you have done everything to stand, stand firm then, with the belt of truth buckled around your waist, with the breastplate of righteousness in place, and with your feet fitted with the readiness that comes from the gospel of peace. In addition to all this, take up the shield of faith, with which you can extinguish all the flaming arrows of the evil one. Take the helmet of salvation and the sword of the Spirit, which is the Word of God, and pray in the Spirit on all occasions, with all kinds of prayers and requests. With this in mind, be alert and always keep on praying for all the Lord's people. Again, that was Ephesians 6, verses 10 through 18. As followers of Christ, we are engaged in a spiritual battle that requires spiritual armor. Each piece, truth, righteousness, peace, faith, salvation, and the Word of God, plays a vital role in protecting and empowering us to stand firm. Take time today to prayerfully put on each piece of God's armor. Ask God to clothe you with truth, cover you with his righteousness, prepare you with peace, strengthen your faith, secure your salvation, and equip you with his word. Consider which piece you need to focus on strengthening right now. How can you make this spiritual discipline part of your daily life? Let's pray. Heavenly Father, today we put on the full armor of God. Strengthen us in your mighty power to stand firm against every scheme of the enemy. Clothe us with truth, guard our hearts with righteousness, and steady our steps with the readiness of the gospel of peace. Let faith be our shield, salvation our helmet, and your word our sword. Keep us in constant prayer, alert and steadfast. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Friday. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. The Dow's up 99 points. And that's due to United Healthcare. We'll talk about that in a minute. The Nasdaq's down 91. S&P 500 is down 15. And the Russell 2000 is down 13. Looks like that dose of reality we've been looking for might be settling in. I don't know. We'll see. Crude oil's down 88 cents, trading 63.09 last. That's a gain of almost 1.5%, or a loss of almost 1.5%. Gold's up $5, trading 33.8820 last. Silver is down a nickel, trading 38.02 last. And the Asian markets at the close. The Nikkei posted a gain of 729 points, 1.75%. The Shanghai rose 30, which for the Shanghai, that's almost 1%. The Hang Seng fell 249 points, which is almost 1%. And in the European markets at the close, FTSE down 38, the DAX down 2.5%, the CAC up 53. So we had a mixed day in Asia. It was a mixed day for the UK. And at the moment, it's a mixed Radio Friday here in the US of A. Let's take a look at the news. President Trump and President Putin are set to meet at Joint Base Elmendorf-Richardson in Anchorage, Alaska at 3:30 p.m. Eastern today to discuss the war in Ukraine. The talk, which will be conducted one-on-one with 2 translators present, that always worries me, because you never know if the translator is going to, maybe inject some of their own thoughts and ideas. I think Putin speaks a little bit English, enough to know if the translator gets too far off course. I don't think Trump speaks any Russian. So, anyway, after the meeting, if no one has a bloody nose, they're going to have a business lunch with their delegations and then conduct a joint press conference. While Putin and Trump have had several phone calls this year, this will be their first in-person meeting since 2018. 7 years. Ukrainian President Zelensky will not attend, though he did join Trump and other NATO leaders in a virtual meeting on Wednesday. During that call, Trump affirmed his commitment to a ceasefire and agreed not to discuss peace deal parameters, including possible territorial divisions, without Ukraine present. Putin reportedly seeks to add U.S.-Russia nuclear arms relations to today's agenda. Trump told reporters his aim is to secure a meeting between Putin and Zelensky. It's their war. Need I say more? I understand we've been the world's policeman for a long time. And Trump has done a really great job since taking office. Peace has been breaking out around the world. But this one, it's almost like the grudge match between Trump and Powell. I don't think either one of them, Putin or Zelensky, is going to back down. And Trump has said, basically, he could care less about Russia or Ukraine. Now, he didn't use those words. I did. He said, my only concern is thousands of people are needlessly dying every single week. Now, maybe you have a relative that died in World War II, okay? Storming the beaches of Normandy or whatever your lineage is, okay? Those people had a reason to die for. But this thing going on between Putin and Zelensky, between Russia and Ukraine, it's over a little piece of land. Now, obviously, the simple thing would be for Zelensky to say, hey, just take the land. I value the lives of my people more than I do that piece of land. But then, of course, Putin will see that as a sign of weakness. If he gets one little piece of land, then he's going to want it all. Well, so I'm just glad you and I don't have to deal with this. We got to deal with the results of it, however it shakes out. The weight of the world is not on our shoulders. Stanford University researchers have successfully translated patients' inner monologues with up to 74% accuracy, according to a study released yesterday. This is a little scary. Here come the thought police. Brain-computer interfaces have become increasingly adept at helping people with neurodegenerative diseases communicate. A team of researchers took this further by studying not just attempted speech, but silent thoughts. They implanted microelectrodes in the brains of 4 participants with paralysis from either ALS or a brainstem stroke. They then instructed patients to speak or imagine a set of words. Both activated similar neural pathways in the brain's motor cortex. This is the region responsible for speech, with imagined speech showing weaker activity. The team used AI to interpret inner thoughts from a vocabulary of about 125,000 words. To initiate interpretation, patients were given a password, instructed to think chitty chitty bang bang. I'm not making this up. To prevent the computers from continually interpreting their thoughts. I don't know what you say to turn it off, but that's how you turn it on. Researchers hope the study will help patients communicate more quickly. Now, of course, we can see how this can be used for good, but I think it's pretty obvious how it can be used for evil. So, anyway, maybe we won't see the thought police in our lifetime, but our children very well may. Certainly our grandchildren. And 10 years ago, we would have thought that probably just wasn't possible. South Korea's Supreme Court dismissed a U.S. composer's $21.6 thousand lawsuit. That's got to be a misprint. I'm sure it must be 21.6 million. Anyway, the lawsuit alleges the viral children's hit, Baby Shark, was plagiarized, ending a 6-year legal battle. The court ruled Jonathan Wright, also known as Johnny Only, lacked the originality needed for copyright protection in his 2011 version, as both his and Pink Fong's 2015 adaptation were based on a traditional campfire song more than a century old. The ruling reaffirmed that the melody remains in the public domain. Baby Shark became, I know you're all Googling it right now, those of you who've never heard it. Baby Shark became a global phenomenon after Pink Fong's YouTube video exploded, boasting roughly, get this, 16 billion, that's B as in billion, views by 2025, and standing as the most watched YouTube video of all time. It reached number 32 on the Billboard Hot 100 in 2019 and was the first YouTube video to cross 10 billion views in 2022. The song sparked social media trends like #BabySharkChallenge. Baby Shark remains a major revenue driver for Pink Fong, earning $32.6 million in the first half of this year. The brand has grown into TV and Netflix series, films, apps, and even a collaboration with SeaWorld. That's when you know you got a hit. You get a collaboration with SeaWorld. Now, I'm going to be honest. Maybe I've heard it and didn't realize what I was hearing. I've never intentionally listened to Baby Shark. I've heard about it. I just never got around to checking it out. Okay. Bert says we're going to roll this weekend. Yeah, we'll be rolling crude this weekend. Thank you very much for that, Bert. What's the symbol we're rolling to if you're listening in? I don't know. Hang on. The first notice date is the 20th. So, all right. So, when the alerts come out Sunday night, we will be trading crude on the October contract, which is GCLV 25. Again, and for some of you, it's just CL, V as in Victor, 25. Hot off the press, straight from the broker's desk. Thank you, Bert. Okay, back to where we were. Retail sales in July rose 0.5% from the prior month, a rise that was slightly below Wall Street forecasts, but a sign the consumer continues to steady the ship after a dramatic drop in spending this spring. Economists had expected retail sales to rise 0.6% from the prior month in July, according to data from Bloomberg, excluding autos and gas because we don't use those. Retail sales without autos and gas rose 0.2% last month. Today's report marks the second straight month retail sales rose after 2 months of decline in May and April, with May's 0.9% heightening fears over the health of the U.S. consumer. June's retail sales were also revised higher on Friday, with new data showing sales jumped 0.9% from the prior month, more than the 0.6% that was initially reported. Interesting. Well, this is the year of all-time historic highs. United Health is up 14% on the session right now. U.S. stocks were mixed on Friday as Wall Street tempered its rate cut hopes amid economic data this week that showed higher than expected wholesale inflation and a rise in July retail sales. Traders also awaited Friday's meeting between Trump and Putin, looking for clues on how the outcome could steer the markets. So that's why the Dow was in the green and the other three indices were in the red. It's running off the back of United Healthcare. Why doesn't this article give me any information on United Healthcare? Anyway, that's what the headline blames it on that, and then says absolutely nothing about it. Oh, I start writing my own news. Hope I don't know anybody in Hollywood. President Trump said he would unveil tariffs on semiconductor imports over the next couple of weeks as he prepares to expand his tariff agenda to different sectors. I'll be setting tariffs next week and the week after on chips and semiconductors. Trump has already suggested he could set tariffs on chip imports around 100%. On Friday, today he floated an even bigger number. I'm going to have a rate that's going to be like 200 to 300%, he said. The president has also promised duties on pharmaceutical imports in the near future. Meanwhile, tariffs are starting to show up in economic data for the first time in a significant way. Wholesale inflation surged in July, rising by its fastest pace in around 3 years and stunning market observers. Why are you stunned? This is what you've been preaching and prophesying. So far, inflation data has shown little impact since Trump began rolling out sweeping duties in the spring. But as the tariffs become more ingrained in the U.S. economy, economists expect more data points to align with this week's Producer Price Index report, perhaps most notably in next month's Consumer Price Index. So far, stock markets haven't been fazed. U.S. stock indexes hit all-time highs this week as the world adapts. New data this week also showed that tariffs have brought in billions in revenue. Now, I heard Trump use the T word, not tariff, trillion. So, let's go with billions. That's fine. There's a trade-off here. So economists say a portion of that is already coming in the form of price increases on consumers. Right? Okay. Fair enough. Goldman Sachs is not as bullish as some. In fact, Goldman Sachs says the Goldilocks summer could be coming to an end. Well, it's about time. Now, I'm no doomsday prophet, but we all know that markets don't just go up forever. Well, I take that back. The indices do. I mean, they have serious drawdowns, retracements, etc. But over time, they do, in fact, go higher. Individual stocks can go to zero, but the indices never will, because they're constantly rotating companies in and out of the index. S&P 500, there's 500 companies, large cap. Okay, one gets sick, they boot them out, bring in a new, strong, healthy company. Same with the Russell 2000, same with the Dow 30, same with the NASDAQ 100. They're constantly shuffling the deck, so you don't have to. I wish we all wish we could be 21 again. But to be 21 again and know that if I simply put $100 a week, never looked at the Wall Street Journal, never watched the financial news, just put $100 in the S&P 500 index, a index fund. There's quite a few to choose from, but they're all based on the same thing, 500 companies that make up the S&P as defined by the board at Standard & Poor's. Had I put $100 a week, which I could have afforded at 21, week after week, never worrying about the economy, it's up, it's down, whatever. When the market's down, you get more bang for your $100. When it's up, you get less bang. It's dollar cost averaging. From 21 to the age I am now, we probably wouldn't be having this conversation. But God's got a reason for everything. So, anyway, after months of ideal market conditions, Goldman Sachs warns that underlying risk could send stocks tumbling. The current backdrop of stable economic growth, moderate inflation, and a strong earnings season, fueled by big tech's AI spend and hopes for an interest rate cut, has created a summer of rally. But a key factor behind the market stability has been a volatility reset, with investors accepting lower returns on riskier assets as the market avoids sharp price swings. Goldman noted that during Goldilocks regimes, low market and economic volatility typically lead to more stable returns. However, the bank warned that this calm could quickly turn into a storm if growth slows or the Fed tightens monetary policy. Tightens monetary policy? That means a rate hike. Now, I have my issues with Goldman Sachs, but I got to hand them this. Give credit where credit's due. They're usually right. On a typical year, they have, across all their trade desks, they have like between 3 to 5 losing days. I'm doing air quotes here. Yeah, go Google it. The Attorney General of Louisiana has filed a lawsuit against Roblox. Now, if you're of my generation, you may have never heard of Roblox. If you got kids or grandkids, you probably have. Roblox, accusing the platform of failing to implement basic safety controls and making the site the perfect place for pedophiles. The lawsuit, filed on Thursday by Attorney General Liz Muriel, alleges that Roblox has and continues to facilitate the distribution of child sexual abuse material and the sexual exploitation of Louisiana's children. It also accuses the platform of purposely not rolling out basic safety controls to protect children from predators and failing to notify parents of risk. Roblox, which launched in 2006, has 82 million daily active users. The lawsuit notes that 20% of these users are under the age of 8. Not 18, 8. Whereas another 20% are between the ages of 9 and 12. So that means 40% of their users, of these 82 million daily active users, 40% are 12 years old or under. Now, personally, I don't even think a 12-year-old should have a phone or a computer with access to the internet. And, well, here's proof. We'll see where this lawsuit goes. If it has teeth, I'm sure other states will follow suit. But if your kids, ask them. Ask your kid or your grandkid or your grandchild. Say, hey, what do you think about that Roblox? And if they go, man, it's awesome, then you need to have a long talk with their parents. If you're their parent, you need to go just grab that machine. I'm serious. When children are exposed to that kind of garbage at such a young age, it scars them for life. It's no joking matter. So anyway, all right, let's do the Logic 247. Where is it? I got it over here. Yep, there it is. All right, come on. Logic 247, and it's our 24/7 around-the-clock E-mini alert service. We're currently in week 367. Over the last 367 weeks, we have issued over 20,300 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. Valerie did the recap this morning at 8 a.m. Eastern. I don't have any plans to put out additional alerts today. However, there could be some changes to these 19 waiting, good or bad. So this afternoon, evening, at the latest tomorrow morning, she'll finalize the recap for the week. But at the time she did the recap this morning, 8 a.m. Eastern, we issued 61 alerts since the markets opened this past Sunday night at 6 p.m. Eastern. If you're new to our neck of the woods, that's when we go to work. Not Monday morning at 9:30. That's when the live training room opens. But we go to work in our Telegram channels Sunday night at 6 p.m. Eastern. That's when the week begins for us. That's when futures start trading from 6 p.m. Eastern Sunday night till 5 p.m. Eastern Friday afternoon. There is a 1-hour break each day, like last night or yesterday. The Thursday session ended not at 4, like stocks, but at 5. 1-hour break, sweep the floor, empty the ashtrays, and then the Friday session began last night at 6 p.m. Eastern. So we still got 19 hanging out there. So 61, 2 never triggered, 19 waiting. That gave us 40 actionable alerts this week. Now the alerts are issued well ahead of them triggering. Yeah, you don't have to trip over your feet to get to your desk. Minimum of 20 minutes. Sometimes a couple hours. Sometimes a couple days. It's not like in the live room in the morning where the setup appears and you got to jump on it immediately. No, this is bigger picture, looking into the future kind of stuff. So this week we had so far 6 stop out, and that's 15%. Again, what we've averaged over the last 367 weeks and over 20,300 alerts is 20% or less being stopped out based on simple market structure and a simple process we teach all of our passport holders. We had a couple weeks in the single digits, and now it looks like this will be our second week in double digits. But again, we're still below the 20%. And even if we were to finish the week up somehow over 20%, that wouldn't affect our average over the 367 weeks, because like 3 weeks ago it was 8%, 2 weeks ago it was 4%. I think last week was 14%, if I remember correctly. Huh. Well, I'm sorry I had to answer that text. It was quite important. Anyway, so we're sitting at 15%. Valerie will update us this afternoon. Again, I don't foresee putting out any additional alerts today. I got stuff to do. And a reminder, Michael's out next week, so it's kind of a vacation week. I'll open the room every morning for those who need to use his charts because you don't have your own, or because you don't have the trigger down at the bottom. So I'll open the room, but it'll be video only, no audio. I'll still do the afternoon broadcast, but they'll be short because Michael won't be on. He'll be back Friday morning. Okay. Now, 367 weeks. That's how long we've had Logic 247. We did the math the other day. It's a little over 7 years. But years, probably 3, 4, maybe 5 years before we had Logic 247. We had the concierge trade alerts. They actually started as just Twitter posts, and then they evolved into an official product. If you want to call it that, I guess you can. Now, the logic alerts can come out anytime around the clock. 2 a.m., 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session and vice versa. But the CTAs, they're posted 5 minutes ahead of the Globex Open each evening, for the most part. Some days I'm a little early, some days I'm a little late, but for the most part, I think every day this week I've got it out 5 minutes ahead of the open. So when we go through the individual charts, and you see that, just keep in mind that all of our traders and trial members had those targets 5 minutes before the market opened. Okay. S&P 500, the Dow, the Russell, crude oil, NQ, gold, and silver. All right, Michael's running late, so let me respond to him. All right, let's go look at the chart. S&P 500 E-mini futures, the bellwether. We have a new all-time historic high yet again. 6508.75. 6508.75. All right, that's 6509. I'm not going to fidget with it and try to get it down one more tick. It's hard on the daily chart. So now look what's happened. We opened here, put in the higher high, barely. Well, actually, 6502 half was the previous intraday high. Yesterday was the all-time historic closing high. We closed at 64.8975. We opened last night at 89.25. We ran up to put in that new high at 08.75. And we've come down and tapped support at the step line. Remember I kept saying we got all these layers of support below us? So we got a new high, immediately sold off, but found support at the black step line, just like we did yesterday. Does that mean we're going to consolidate sideways here for a while? Maybe. The more we consolidate, pretty soon the step line is going to go from the left. Actually, it's directly above. Okay. Here, on the way up, the step line was on the left side of blue and climbing. But sideways consolidation or a drop is going to take blue and climbing to the right side of blue and climbing. When that happens, we expect a retracement back to the BBC. That's the green line. It stands for bull-bear cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, we're bullish and expect higher prices. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. And as you can see, the pullback holds more often than it doesn't. Now, once we're above, now this was below the BBC and all those pullbacks held. But once we got above, pullback held, pullback held, pullback held, pullback held. And the most recent pullback right here held. You're like, no, it didn't hold. Price went all the way down to the 50% fib extension. Yeah, you're absolutely right. But the candle is still touching the BBC. Price has to actually open and close below the BBC. Okay, like here. So we closed above, just like over here we closed below. But after we closed above, this was the really important day because we opened and closed above the BBC. So that's your confirmation. We never got that confirmation here because the following day we're back above the BBC. So the pullback held. But you heard what Goldman Sachs had to say, and of course they have their reasons, probably more fundamental than technical. We're purely technical. But we take out yesterday's low at 53 1/4. That takes us down to about 64.35. And then the next support is at about 63.93. Institutional traders, the ones that actually move price, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. I encourage you, whether you trade futures or stocks, crypto, Forex, ETFs, spend 2 minutes looking at the daily chart before you start trading. Okay? See what the deep pockets are up to. And not only are you able to see what the deep pockets are doing, but you're able to identify major areas of support and resistance, like I just did. The next resistance overhead is way up at 65.85. Because if you look left, there's nothing there because price has never been beyond the high of this session. The S&P 500 E-mini futures has never traded above 65.0875. Now you might be wondering, how come the high wasn't 65.09? Because nobody on planet Earth was willing to pay 65.09. That's the answer. Now you might hear all kinds of complicated reasons, but that's the truth. There were offers out at 65.09. Okay? There were people who wanted to sell 65.09. But nobody took it. And so price dropped. But then when it hit support, it bounced. That's what we expect when price hits support. Now what'll be interesting to see is if we can get below the step line, then we got this support, then this support, then this support. We got a whole lot of support. But one bad econ report, one, Putin punches Trump or the other way around. That's what they call a game changer. All right. All alerts are created on the 30-minute chart. The vertical line separates today Friday, back here's Thursday. The horizontal lines are the weekly trading zones. They're published Monday morning at 6:15 a.m. Eastern. Once the zones are published, they're carved in stone for the entire week. They don't change in any way whatsoever. You can see we had a very flat day yesterday, but the market found support at the zone, bounces back up to the BBC. This was the opening candle last night. Now remember, all of our traders and trial members had these targets 5 minutes before the market opened. This was the open, and by 10 o'clock last night, we had hit the long target. We overshot it by just a little bit, putting in that new all-time historic high at 65.0875. Then blue and climbing, which when it gets above price becomes resistance because it's usually on its way to becoming red and falling. So we got a leg or a retracement, and then we got a leg and a little retracement. We hit the long target, and then we hit the short target this morning off the 9:30 open. And we almost made it to the zone below where we found support yesterday. What was the low? The low was 61.5. The zone is 64.59/64.60. Again, the zones are published Monday morning, 6:15 a.m. Eastern for the last 15 and a half years. Once they're published, that's it. They're carved in stone for the week. Now notice that the step line is about to cross red and falling, and we're printing a green candle. So what does that tell us? That price is probably headed to the BBC. And we know that the pullback holds more often than it doesn't. So this would be a counter trend trade right now to go long. And the Logic 247 channel, I've said it a couple times, there's over 20,300 individual alerts. Not one of them is a counter trend trade. Every one is a trend trade as defined by the 30-minute chart and the 30-minute BBC. A long alert means price is above the BBC. A short alert means price is below the 30-minute BBC. So we came down and we missed it by how much? 1.5. Yeah. These are the zones that were published Monday morning at 6:15 a.m. Eastern. Looks like we're just going to have kind of a quiet sideways day heading into the close. The Dow, which was the big up guy today because of United Healthcare, here's where we opened last night. Here's where we hit the long target. Price continued to climb. And right here, we dropped to the BBC support. Bounced up to red and falling. And then we dropped. Bearish cross. That's where the red line gets below the green line. All the way down to the weekly trading zone. This is the highest weekly zone for the week. Notice the step line, the black step line, it's curling. As it crosses to the right side, see on the way down, they were parallel. Step line, red and falling. But as it curls, we expect price to retrace back to here. Now, based on the last 15 and a half years of history, we expect price to be at or below the highest weekly zone by close of business today at 5 p.m. Eastern. Is it possible we close above the highest weekly zone? Sure. Has it ever happened before? A few times. This candle looks like it wants to drop back below the zone, but the fact that the step line's curling up, I mean, we could still go up, tag that, and still get back below the zone. So we'll know at 5 p.m. Eastern today. The Russell, here's where we opened last night. We made it about halfway to the long target and ground to a halt for reasons unbeknownst to me. And that sometimes that happens. That's why when I talk about the Logic 247 alerts and I tell you that we've averaged 20% or less of the alerts being stopped out, because we don't know what the market's going to do next. Nobody does. I don't care what they tell you. It's not possible. But you can know what the next high probability move is. And now there's a world of difference between those two statements. I know what's going to happen, and I know what the next high probability move is based on historical price movement. So sometimes this will happen, and don't let it blow you out of your chair. If it happens to you more than 20% of the time, well, work on your chart reading ability. So we get below the BBC, pull back to the BBC holes, and then we drop to the short target, which was based off right here, where red turned to blue. We actually put in a low, quite a bit lower than yesterday's low. What do we got? What do we got? Yeah, this little area right here. It's a little inflection point. That's today's low. Again, we have the step line curling. So we should get a retracement back to the BBC. Then it becomes a question of, is it the pull? We know the pullback holds more often than not. The question is it going to hold this time? Well, we don't know. The price gets there. Then the next candle prints. The NQ. This is where we opened last night. And up we go to the weekly trading zone. This high. What's this high? 958.5. What's this high? 963. So we took it out by a couple of points. Not much. But you should be expecting resistance there. I had the long target keyed off of this intraday high put in yesterday. Okay, we didn't get anywhere near that. Basically, market structure and the zone stopped us in our path. So we get a leg and a retracement. We get a leg, takes us all the way down to the short target, which was based off this low from yesterday. Then we get a bounce back up to the step line. That sends us back down to support at the short target. And then we trade a little below. Let's lower that candle. 732.5. 734.5. Buyers came in 2 points early. And now it looks like price is going to retrace back to the BBC. See how the step line's curling? Just like all the other markets. Those are the indices. Now we move to crude and gold and silver, which are different animals. This was the open last night. We're above the BBC, so we're bullish. We expect higher prices, but we got red and falling overhead. See, yesterday we're above the BBC, but we had blue and climbing. So that's bullish conditions. But it was a different story last night. When red and falling gets above price, that's bearish. We hit the zone and we got a nice bounce. But the second attempt we traded through and we missed the target by 2 pennies. 63.20, and the low of that candle was 63.22. What was the low of this candle? 22. So from support up to resistance, back to support, back to resistance, back to support. And here we sit. Gold. Here's where we opened last night. Kind of sideways. We hit the BBC resistance, but it doesn't want to give it up. So we go up to the zone. Now, this is the same zone where yesterday we found support. But once we get below it and pull back up, we expect it to be resistance. When price drops to a zone, we expect support. When it rallies up to a zone, we expect resistance. Okay, what a difference a day makes. Support yesterday, resistance today. There he is.
There I am. I'm here. Sorry.
And on silver, guys, we came out of the gate last night, hit the short target by 9 o'clock, and then we hit the weekly trading zone that was published Monday morning at 6:15 a.m. Eastern. We hit that last night at 10 o'clock. And then we bounced up to the BBC resistance, which set us back down to the zone support. Support, 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 support. Now we're actually back above the BBC, and we're about to get a bullish cross, but look what's happening with the step line. Yeah, I got a feeling that we're not going to bounce, that we're actually going to trade lower. Okay, I just wanted to get all that finished. And this is how we look on the daily chart. Price is pinched by the new all-time historic high put in last night, overnight. And the black step line support. Resistance at the all-time historic high, support at the black step line. And I think it'll probably be pretty quiet Sunday night, based upon the meeting with Putin this afternoon. Sunday night could be an explosive session. Just saying. Michael, if you're ready, go ahead.
I am ready. Thank you. Sorry about that.
No problem. Everything all right?
Yeah, everything's good. Everything's good. Just trying to get things squared away before I go. All right.
Okay. Looks good.
All right. Let me just refresh this page, get rid of this page, and now we can start again. Refresh this page. Now we'll hit this, and let's bring up the current one. Perfect. All right. Good afternoon, everyone. Today is Friday, the 15th day of August, 2025. Now, if you have not taken a free trial with us, go to mytradingiq.com and click on the purple button right there. There's no credit card required for the trial. Just click on that purple button. It will bring you to this registration page. That's going to register you for next week. All right. All you have to do to take that is put in your first name, your last name, your email, your phone number. Down here at the bottom, give us your TradingView login ID. All right, your TradingView login ID. That's all we need. Yeah, hit the register button, and we'll get your indicators indicating on your desktop. All right. Now, the spreadsheet for today, we ended up doing pretty well. I didn't get to where I wanted to get. If we would have had just a few more minutes, I think we would have. But I was trying to get up above the average down here, the daily average, 1287. But we only got to 1140. Still pretty well. We did pretty well. We ended this week just like we did last week. Thursday, Friday were the good days. Monday, Tuesday, Wednesday were kind of slow. Again, reminder to everybody who's in here, I'm not going to be in after this session. I'm not going to be back until next Friday. So we ended up with 115 ticks on the NQ, 19 on the Russell, 22 on gold, and 20 on the ES. I put us at $1,140 on the morning session. Today it took 5 minutes and a single trade to get to $1,000 with 10 contracts on, and we took a total of 34 trades. So on the month now, I am now up $8,412 over 11 business days, averaging $764 per contract per 2-hour business day. On the year, I am averaging I'm averaging $1,287 per contract per business day. But on the year, we're up $181,507. Now, if you were to quit trading when you get the goal for the day and add one contract per month, it's like a lot of words I said really fast right there. But let me just see who's in here and make sure that you all probably understood those. Well, yeah, okay, so let me just describe the 24/20 blueprint. All right, the 24/20 blueprint means if you achieve $2,000 in profit, you add another contract. Now, there's roughly 20 business days in a month. So if you make $100 per day, which is my goal, to make this column equal 100, to make $100 per day, and you stop trading, then at the end of the month, you'll have $2,000. Over the 20 business days, you have $2,000. You can add to the contract. Now, usually you can end up with, when you quit trading, like any one of these that's over 100, well, that's over $1,000. Just take off the zero on the end because this is all with 10 contracts. But anyone's over $1,000, like this was 120, 110, 170, 250, 270, 302, 110. I only had one day. Today was the only day this month that I actually only made $100 per contract when I got the goal. Every other one was higher. So usually you're going to get a little bit higher. So you hit that $2,000 a little bit sooner than the end of the month, most of the time. So what I've done is I just said, well, we're just going to add one contract per month. And so now you'd be on your 8th contract. Now I just started the year with 10 and I've gone all year with 10. So that's what I'm doing this year. The last few years though, I start out with 1 and I work my way up. But this year I just said I'm going to trade 10 all year. And I kind of like that. These are the results. If you did what I did and you quit trading when you get the goal for the day, adding one contract a month. So far this year, you would have only had to work 18.88 hours, just about 19 hours, and be up $101,000. So you'd be averaging $5,354 per hour. That's adding one contract per month, doing the same trades that I do, and quitting once you get the goal for the day. Now, most days I get the goal pretty early. Like, this is the number of minutes. Now, most days I get the goal pretty early. We had a long one this month right there, 32 minutes. Had a couple of long ones, over 10 minutes, over 15 minutes once, twice now. Don't usually get over 15 minutes that much, but the last couple of months, we've had a couple of them that have been longer in there. And actually the last couple of weeks, Monday, Tuesday, Wednesday, the last couple of weeks have been a little more complicated trading. I mean, look at the results. Monday, Tuesday, Wednesday, Thursday, Friday. Monday, Tuesday, Wednesday, Thursday, Friday. And this was a Friday. Our best day of the month so far this month. Our best day of the month so far this month was on a Friday. And last month, I don't know, our best day of the month this month was better than any of our days last month. What about the month before that? Nope, we had 1,500 on there. June 20th, we had 1,500 per contract. 1490. Nope, 2,300 right there. On May 15th, we had 2,300. 4,000 right there. I think that was our best day right there. 4,000. We had 3,990 on April 1st. That was when the tariffs were first announced, or was supposedly first went into effect. And then we had one more really good day. That was our best day, 4,177. So if you do that with 10 contracts, that was with one contract. With 10 contracts, it was $41,775 that day. It's a pretty good day. Anyway, today, $1,140. So if you, on the year now, 181,507, averaging 1,287 per day. All right. All right. Now, for anybody that's just getting in here right now on YouTube, if you haven't taken a free trial, go to mytradingiq.com, click on the purple button. No credit card required for the trial. Now, I'm not going to be in next week until Friday. But you can still sign up for the trial and get the indicators indicating on your desktop, and we'll just give you another week. Okay. Okay. Now, because there is no credit card, there is no credit card because there is no credit card required for the trial. So let's get into what we did today. We had the majority of the trades were on the NQ. I'll just start out with gold and work my way across. What did we end up with the most money on today? The NQ. Okay, well, we'll start out with gold. Our first trade on gold was right here, and I believe that is where we get. That is how we got our gold today. We got 10 ticks in profit on that one. The next trade on gold was right here, and we stopped out minus 15, so that put us at minus 5. Then we had plus 11 there. It looks like they got us up to plus 6. Is that right? No, that's not right. Oh, we had +5 there that got us up to 0. That's what it is. We had +5 there that got us up to 0. And then we had 1 there that got us up to 1, 10 there that got us to 11, then 11 more got us to 22. Then we had a break even, and that is where we wrapped it up. Now, looking through here to see if we had any trades. This was actually a trade right here. Easy and obvious trade right there. This was an easy and obvious trade right there. This right here, easy and obvious trade. Okay, so we ended the morning session waiting for this to happen here. And that makes this not a trade. This is still a valid trade, would have given a little bit of profit. This was a valid trade, would have given a lot of profit. This right here was not a trade, so that means that's not a trade. And that was it. So we had a couple of trades with profit during the break on the gold. Let me bring up the question box and see if anybody's asked a question. Nobody's asked a question yet. Okay, the Russell. On the Russell. Let's see. On the Russell. Here we are. On the Russell, we had a down close right here that was a break even. Then over here for the Russell, we picked up 10 ticks. It took us a while to actually get a trade off on the Russell. It was 11 o'clock here just about. And we got our second trade on, so the first one that actually made anything. We picked up 10 ticks there. Then we picked up 2 there and 7 there. Got us to 19, and that is where we ended it with the Russell. Okay, now during the break, it looks like that would have been a trade right. Did that make it out? Yeah, that would have been a trade right there. Would have been a break even for me probably. This would have been a trade right here. Would have been profit. This would have been a trade right here. Would have been a break even. Oh, it just got in the green and stayed there during the break. It really didn't gave those couple of trades, and that was it. This one right here wouldn't be a trade because this one didn't make it into the overbought. Okay. So there were a few profitable trades during the break on the Russell. Now the ES, we end up with that +20. All right, on the ES, our first trade here on the ES, we picked up 4 ticks on that one. Then 1 there got us to 5. Then 6 got us to 11. Then 2 to 13 and 7 to 20. And that is where we ended it with the ES. During the break, it got whippy right here, right before the break. There was this right here. Now that was right up above the midpoint. If you blow it up, it was actually right on the midpoint. I might have taken that. I probably would have had my order waiting there. So I probably would have gotten that short right there if I were trading, but I wasn't. This would have been a trade right here. And the pullback on that, if you got the exact entry at 7, that would have been 71.5. And it pulled back down to 69.75. So it would have come within 1 tick of stopping me out. 79, right? I would have been in right there at 71.5. So 60.5, 69.5. 69 is where my stop would have been. So my stop would have been right here. So it wouldn't have stopped me out. It would have ended up with something on that. Might have been a break even as it built these bars right here. It might have been a little bit of profit, probably a couple of ticks profit on the way I was trading today. This right here would have been probably a break even. And then over here was profit. That looks like it would have been a trade right there. That would have been another one of those that was really close to stop out. Okay, if you got the entry right here at 78.25, 77, 76, 75, 75 is the lowest you could go. And 75, 75 is exactly where it went right there. So that probably would have stopped you out to the tick right there. And to be doing this right here. Well, I'm not taking the trade right here because that up close did not hit the midpoint. Anyway, that was the ES. We ended up with +20 on the ES this morning. All right. Now the NQ. We had a bunch of trades on the NQ today, as we almost always do. 5, 10, 15, 18 trades. I think that's what we got. Let's go back in here and go through the trades one by one. All right, here we were right at the beginning. we stopped out on this first trade, and it took us a bunch of small trades to get it back. So we stopped out on the first one, minus 25. Then we got a plus 4. That got us to minus 21. A break even, another break even. Then the plus 4 got us to minus 17. Then missed all that. And here we got another plus 4. Got us to minus 15. Then we had a break even. Then we had a plus 4. Got us to minus 13. Then we had a plus 6 that got us to plus 7 that got us to minus 8. I'm sorry, no, plus 5 got us to minus 8. And then a 16. Yeah, I think it was right in here. I got this down here a little lower, and I ended up getting 16 ticks, and that got us to plus 8. And then, all right, I think this is one that got 16 ticks, and this one we got plus 8. Anyway, we're at plus 8 at that point, I think. And went to plus 12, and then we stopped out. And I wrote that right. I wrote that down wrong. No, I didn't. We went to plus 12. I'm sorry. I went to plus 12. And then we went to minus 13 on the stop out. Then we had a break even. Then we went from 13 to 32. So that was, I think, our only 45 tick trade. From 13 to 32. We went from 32 to 48. And then over here, 48 to 64. Then we stopped out again. Went down to 39. Then we went from 39 to 71. Then 71 to 103. And then this last one right here, I was hoping to get the whole 45 ticks on, but we only got 12. Went from 103 to 115. And that was it. So we ended up with 115 on the NQ. Now, during the break. So what I'm looking for here, just so you guys know, I'll go through it little by little with you, okay? Let's go through it bar by bar. So what I'm looking for, if we go through bar by bar, right here, this came out of the overbought, so it's got to get all the way into the oversold before we have a trade, okay? Got to get in the oversold and back in the overbought. So right there, it gets in the oversold. So now it's got to get back in the overbought and get to the midpoint, right? Just follow this down here. It's got to get back in the overbought and get to the midpoint. First one, almost there. Next one needs an up close at the midpoint. And you got that right there. Up close at the midpoint. So now you need a down close off the midpoint. Bang, right there. That's your down close off the midpoint. That's where you enter. That would have been profitable. Get all the way down into the oversold again. So now you need to get back into the overbought. All right, you're almost in the overbought. The midpoint is right up above you. Nope, no overbought. You're in the oversold again. You're almost in the overbought. The midpoint's right above you. You're in the overbought. Now you need to get back down below the midpoint. There it is. Could have shorted right there for another gain right there, profit. Now you're in the oversold. You need to get back into the overbought. You're back in the overbought. Now you need to get down below the midpoint. That didn't make it to the midpoint right there. And blow that up so you can see it a little better. See, that's above the midpoint. I wouldn't take that. Okay. So now it's come out of the overbought, so it has to get into the oversold and back into the overbought down here. Because it's come out, it's got to get all the way down here and then back up to get you another trade. So no trades in here. It's back up, but still no trade because it never made it down to the oversold. Still no trades. Now it's in the oversold, so now you can start looking for more shorts. But look how far back it pulled. It almost hit the YVR right there. So you can look for more shorts right now so far. Okay. Now it's got to get up to the midpoint. Not at the midpoint. Back in the oversold. It's got to get up to the midpoint. Not at the midpoint. It's got to get up to the midpoint. Not at the midpoint. Still got to get up to the midpoint. Not at the midpoint. You see how the midpoint keeps getting dragged down? That's because the bottom keeps falling out of it. The top is steady, right? The swing high is steady, but the bottom keeps falling out. So the midpoint keeps getting dragged down because it's the difference between these two. So we're still saying it's not at the midpoint, right? Now, you see how it got into the overbought here, and it's nowhere near the midpoint. So what it's going to do right here is reset the midpoint when it comes out of the overbought. It's going to make up this difference, this huge difference that you have in between here and here, because it's going to reset the top. So that's going to reset the midpoint when it comes out of the overbought. Okay, it goes a couple of bars, and there it is. When it comes out of the overbought right there, it's going to reset the top. It's going to bring the top way down here, and there it is. See, the top is all the way down here, the top of this bar right now. So it's reset the midpoint for you. So now it needs to get into the oversold and back into the overbought. Okay, back into the overbought. Still not there. Still not there. There. Now you're almost back in the overbought. Now you're a long way from price too. So here, you're almost back in the overbought. And so now it's got to get into the overbought and hit the midpoint. All right, still not there. It's in the overbought. It's not at the midpoint. And you can see the next bar comes out of the overbought. So that's going to reset the midpoint again. Okay, so no trade right there. It's in the oversold, needs to get back into the overbought and at the midpoint. It's not in the overbought yet. There it is. Oops, nope, it didn't get into the overbought. It hit the midpoint, but didn't get into the overbought, so no trade there. It's in the oversold, oversold, oversold. It's pulling back. Still not at the midpoint, still not in the overbought. Now it's in the overbought, but it's not at the midpoint. Now this point right here, guys, this is important because right here, the next bar could have a wick that hits the midpoint and have a down close. So the next bar could be the trigger. Okay. So you'll hear me saying things in the morning. I'll say, okay, the next bar could be the one with a wick. That's what I say, right? The next bar could be the one with a wick because the wick could hit it and have a down close. So the next bar could be the trigger. And did it? Well, actually, if it would have given you a down close, it would have been the trigger. Okay, but you see it came out of the overbought on the up close right there. Actually, gave the up close there. The next bar comes down. All right, because it gave the up close right there and it didn't come out of the overbought, then the next bar could be the trigger. Okay, and the next bar is the trigger. Now, this is the easy and obvious trade. I don't know if it works out, but this is the easy and obvious trade. When it crosses the midpoint as it comes out of the overbought, that's the easy and obvious trade. Okay, I don't know if it works out, but I don't know if that was enough to get the stop to break even if you got entered in right at the bottom of that bar, but it looks like it goes back up and that probably would have stopped you up. Okay, so now you're still thinking short because it's still red background, but you're not going to trade until it gets all the way down into the oversold and comes back out. Now it's switched. So now you're looking for longs, right? So it just changed to a green background. So you're looking for longs. And now you see all the distance it's got between here and here. There's almost no way it's gonna hit that without resetting. So you wait and 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 you wait, and there, it hit it right there. See, it hit the oversold right there. It reset the midpoint, comes all the way. That means the bottom, which you can't even see right now, comes from all the way down here, all the way up to the bottom right here. It resets its most recent swing low when it comes out of the oversold. Okay, if you're on a green background, when it comes out of the oversold, it resets its most recent swing low. And so now that's not a trade because it wasn't off the midpoint, right? But it did make it up into the overbought. So you're looking for it to go down to the mid again, come out of the overbought, get into the oversold, and go down to the midpoint. Now it's taking its sweet time getting down there. There it is in the oversold. Now the next bar could hit the midpoint. It might hit it. It might not. You know, it's 5 points, 975 down to 6. Yeah, so there's only 3 points in there. So the next bar could be the one hits the midpoint and closes up, or it could be one that hits the midpoint and closes down, and the bar after that could be the trigger. But you're close to a trade right here. And it hits it and it closes down. So right here, you're looking for the next up close right now, right? The next up close after it hits it and it closes down, you're looking for the next up close. And there it is. So that's where you go long right there. Okay. Now I don't know what that does. It looks like it went enough right there to get the stop to break even if you wanted to. And then it pulled right back. So went enough to get the stop to break even or take some profit. So now you're looking for it to get, it's kind of got to reestablish the midpoint again, right? From here, it never went into the overbought. So you're not going to be trading any of this junk right here because it's got to get all the way into the overbought and then get back down into the oversold. There, it's in the overbought right now. You see, it's in the overbought right now. So now it's going to get down into the oversold. It's not in the oversold yet, almost. The next bar you can see it does. The next bar hits the oversold and it hits the midpoint. So the bar after this, an up close on the bar after this would be your trade. Okay, and up close on the bar after that would be a trade. All right, and there's the up close, and it happens to be right there at the midpoint. That's okay. It doesn't cross the midpoint and give you that bit, but it's right there at the midpoint. So that's an okay trade to take right there. Okay, and it pulls back, and that would have been just enough to stop you out. So it does it again. It runs up, hits the overbought, comes back down, hits the oversold. So now the next bar again. And up close on the next bar again would be a long trade. And there it is again. And that one does not go enough. So you would have, if you would have done things by the book right here, right there was a trade that would have stopped you out, and right there was a trade that would have stopped you out right in a row. It doesn't usually do that right in a row like that. But you can see the background flips right here. And now you're looking for shorts right there. You want the next bar to hit the midpoint. You want the next bar to hit the midpoint and give a down close. You see right here, it got into the overbought. Next bar, if it hits the midpoint, gives a down close, you have a trade. And it did just that. So you have a trade right there at 23,779. And that gives you some nice profit right there. Makes up for those stop outs. Well, one of them. And now you're looking for it to get back in the overbought, there it is in the overbought. So the next bar, if it hits the midpoint and gives you a down close, you have another trade. And there it is, you have another trade. That one, that would have stopped you out too. Background is still red. So you're not looking for anything in here because it never made it into the oversold. From here, it never made it into the oversold. So you're not looking for anything there until you get there. Now it's got to go into the overbought, hit the midpoint, and give you a down close. The next bar on a down close would be a trigger. And it didn't give the down close until there, and that's nowhere near the midpoint, so that's not a trade. Still the red background. It's resetting it right here. And I have the green background, so now you're gonna be looking for longs. So you're looking to get in the oversold. There it is in the oversold. If the next bar hits the midpoint, gives you an up close, you have a trade. Hits the midpoint, doesn't give you the up close, goes right through the midpoint, no trade. Next bar, now you have a red background. You're looking for it to get into the overbought. Right there, it gets into the overbought, nowhere near the midpoint, no trade. Still looking to get into the overbought. There it is in the overbought at the midpoint. So the next bar down close would be a trade. There it is, that's a trade right there. Gives you some profit. I don't know if that was enough to get the stop to break even. The next bar, still looking for it to get into the midpoint. It didn't hit it right there. This bar right here didn't hit the midpoint. So on this bar right here, this was in partners meeting last night. One of you guys asked me this, Jeff, I think asked me this last night. If it doesn't hit the midpoint like that, and you've been waiting for it to hit the midpoint, can you still take the trade? You can. What I do is I wait for it to pull back a little bit on the next bar. I wait for it to pull back a little bit. So my stop is above the midpoint and above that bar. My stop would be up here. Okay, rather than taking the trade down here, my stop would be right here at the top of that bar. Wait for a pullback, so my stop is a little bit beyond that. Okay, and that works out great. If you did that, it's back at the midpoint. It actually gives you a down close when you hit the midpoint right here. That bar gave you a down close. It's a little unusual that it does that because it went up here on a down close there. It's a little unusual that it does that, and I wouldn't take that trade. Okay, I'd wait until it comes out of the overbought. And it keeps going. And now it changes the background colors. Now you're looking for it to get there. Hit the midpoint, give you an up close. And there it is. That runs into profit right there. Now it never made it into the overbought down here. Wow. I just realized I'm running out of time. It never made it into the overbought. So I'll just go through all this. I just finished doing this. What time is it? 12:37. Wow, I may not finish doing this. So now you're looking for it to get in the oversold and hit the midpoint. It doesn't do it. So now you're looking for it to get in the oversold and hit the midpoint. Okay, so it's at the midpoint in the oversold. So the next bar that closes up right now would be a trade. That's no good. The next bar, if it goes straight up, would be a trade. It doesn't. See, there's no trade there. It's got to get all the way in the overbought now and then get down into the oversold. Okay, you see down here on the bottom, it's got to get all the way down into the oversold now. There it is in the oversold, nowhere near the midpoint. No trade. It's in the overbought. It's got to get down to the oversold. It's not in the oversold. It's at the midpoint and not in the oversold. So no trade. That's got real junky in there. All right, now it's got to get all the way into the oversold before you have a trade. There, it's in the oversold. Let's bring this down. I'll try to go through it a little faster. Okay, it's in the oversold, and that was right here. Right there, we went into the oversold. So the next bar, if it hits the midpoint and closes up, it'd be a trade. It did not hit the midpoint. It just closed up, not a trade. Now it's going to go into the overbought. Okay, now it's going to get back to the oversold. Now the next bar, if it closes up, would be a trade. It's not. The next bar, if it closes up, would be a trade. It didn't. So the next bar is not going to give you anything. Okay, now you're going to get into the overbought and back down to the oversold. There's the oversold. Now the next bar, if it closes up, would be a trade. It didn't. The next bar is not going to do it. Okay, and Now you got the red. So it's going to get up to the midpoint and out of it. Now it's going to get down to the oversold and back to the midpoint. Back to the midpoint. Not back to the midpoint, back to the overbought. It's back into the overbought. Now the next bar, if it hits the midpoint and closes down, it's a trade. It doesn't. Now it's going to get into the oversold, back to the overbought. Next bar, nothing. And that's it. All right, so I did it bar by bar. Now normally I would just cruise along like this and I'd be looking for just those instances. I'd be saying, okay, well, we're looking for something like this, where the midpoint is flat and it came out of the oversold. That would be a trade. The midpoint is flat and it came out of the overbought. That would be a trade. That's how I typically do it when I just cruise along. But that was bar by bar analysis for you. Wow, and it's 131. Man, I did run the whole thing out. Anyway, if you want to, that's how you do it, right? If you haven't taken a free trial with us, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Click on that purple button and fill out this form. If you do it now, you'll have all of next week and the week after, right? Because I'm not going to be here next week. But you'll have the indicators for the whole week, and you'll get your time in the room the week after that. All right.
Yeah, I had mentioned to people they should maybe wait till next Friday to sign up for the trial, but if you want to do it that way, give them access to the indicators and then follow it up with a week of the trial. Yeah, that sounds good.
Yeah, then you have a whole week, a whole extra week with the indicators and stuff. All right.
But keep in mind, you won't have any.
You have to
you
go. You
won't have any hands-on assistance until next Friday when Michael comes back.
Right. You have to go off the videos and stuff as much as you can. All right. So to take the free trial, go to mytradingiq.com, click on the purple button, no credit card required, fill out this form. That's it. We ended the day with $1,140. Let's see how we ended the whole week. We had 1140 plus 1280 plus 510 plus 485 plus 130. So $3,545 per contract this week. It's enough to pay for everything if you want to. And that's it. With that, I'll pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South America's largest city park. Blaine, if you are ready.
Yeah, I am.
Excellent. Excellent.
Okay, recap of the morning session.
Today it took me 5 minutes and one trade to get to $1,000 with 10 contracts.
Good job.
Thank you very much.
Okay, guys, we covered all the markets in their entirety, one by one. If you missed it, you can always go to youtube.com/CFRN about an hour after I sign off, and it will be there for you in its entirety. We archive each and every daily afternoon broadcast. There's currently over 2,800 daily episodes archived. And the Logic 247 alerts are now at 20,300 and something. And we've averaged on a weekly basis 20% or less of the alerts being stopped out. Again, based on simple market structure and a simple process we teach all of our passport holders. So when you take the trial, you not only have access to the live training room in the morning with Michael, but you have access to everything we offer. 2 hours of live training every trading day. That's with Michael. Private one-on-one mentoring. All you got to do is ask. So we treat you just like you were a passport holder when you take the trial. And once you take the trial, this is everything you have access to. The 2 hours of live training every day, the private one-on-one mentoring, strategy you learn, the indicators you own. They're fluid across all markets and all time frames. So maybe you think, well, I don't trade futures, I trade stocks. That's fine. You can use our strategy and our indicators to trade any market. Futures, stocks, crypto, Forex, ETFs. It doesn't matter because price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. That's why it's important to learn how to read the chart so you know where to anticipate potential support and potential resistance. That's the purpose of the Logic 247 alerts. They help you learn how to read a chart. As a passport holder, you will get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published each evening. And most evenings, that's 5 minutes ahead of the Globex Open. But today's Friday, so there'll be no Globex Open tonight. Sunday night, the markets will reopen, 6 p.m. Eastern. That begins our new week. And if there's been no earth-shattering geopolitical news over the weekend, then I will probably put the CTAs out 5 minutes ahead of the open. But if, stuff happens, I may do like I did last Sunday and hold off and let the market open, see if there's going to be any huge gaps, and then publish them. But I'll keep you updated in the Telegram discussion group. And that's another important thing. When you take the trial, you immediately want to go to telegram.org. It's free, it's fast, it's secure. It's the messaging client that we use. It's like the heartbeat of our community. That's where you get the logic alerts. That's where you get the concierge trade alerts. That's where you get the weekly trading zones. That's where you're able to talk to our current traders and ask them how their journey's been. Okay. On Monday mornings, you get the weekly trading zones at 6:15 a.m. Eastern. Thursday afternoons, you get an invitation to attend the members-only workshop Thursday night at 8 p.m. Eastern. There won't be one this coming week, but you also get the golden keys that open all the private channels in Telegram. So when you become a member, you have access to hundreds of previous members-only workshops in that particular channel in Telegram. Really, it is the heartbeat of the community. So if you sign up for the trial, make sure you go and get Telegram. Telegram.org. It's 100% free. There's no advertising. You're not going to get bombarded with a bunch of spam. They don't even ask you for your email address. Imagine that. It's really quite clever. That's why we chose it above all the other stuff like WhatsApp, and there's a million different messaging clients. But Telegram was the cleanest, the simplest, and make sure you get signed up. And if you're already a member and you haven't yet overcome your techno fear of Telegram, please get over it, okay? I have Telegram minimized on my taskbar 24/7. My computers here on the flight deck run 24/7. And so I also have Telegram on my phone, but because I get so many messages through Telegram, I had to turn off notifications on my phone. So used to be in the early days, I would answer from my phone, but if you message and you don't get an immediate response, that means I'm not at my desk. So you'll just have to hang on till I get back to my desk. Anyway, everything a trader needs, all under one roof, one low price. If you've already been on the trial and you're ready to become a member, send an email to Valerie, support@cfrn.net. And just let her know you'd like to become a member. She'll send you an email, explains everything you get as a passport holder. And there's a link to click to make your payment. Once you make your payment, then she'll send you a bevy of emails And there'll be stuff in there that you don't even understand. You're like, oh man, I'm so overwhelmed. I don't know what to do with all this stuff. I'll tell you what to do with it. Create a folder in your email client. Put those emails in that folder. Because as your learning process begins, this is not a get-rich-quick scheme. This is teaching you how to trade. Now, that's a life skill, okay? Once you learn how to trade, nobody can ever take that away from you. So, put those emails in a folder so you know where they are. And then as your learning process unfolds, day by day, week by week, you hear us talking about certain things, I'll say, hey, just go check those emails you got from Valerie at the beginning. And I'm telling you that because if it's the middle of the weekend and you have a question, you've already got the answer. And now you know where to look for it in that folder you created. Okay? Okay. All right, we're going to wrap this week up. We got basically a doji on the day for the S&P. Got a red body to it. So resistance is the new all-time historic high, 65.0875, and support's at the low of the day, 64.61.5. The next support level below that is the VBC, which looks to be about 64.31. Okay. All right. Let's wrap it up with our good word for the day. You have enough. Part 1. Psalm 23:1. The Lord is my shepherd. I lack nothing. Spurgeon's contemporary, Dr. Joseph Parker, pastored the City Temple Church in London. One day he walked up to his pulpit and read this verse. The Lord is my shepherd, I lack nothing. After a long pause, he closed his Bible, looked at the congregation, and said, friends, that is enough. And scripturally and practically speaking, he's right. When God is your shepherd, you lack nothing. Even in the grimmest circumstances, you need fear no evil because he is always with you. Psalm 23:4. And you get to enjoy two things every human being craves: sufficiency and security. Because with God, there is no lack of ability or resources to take care of any situation. Philippians 4:19. It's the reason Paul said that although he had nothing, he possessed everything. 2 Corinthians 6:10. From God's perspective, we need nothing but God himself. The Bible tells us in Romans 8:32, he that spared not his own son, but delivered him up for us all, how shall he not with him also freely give us all things? And since he has already given us his greatest treasure, will he withhold from us any lesser resource? But there are some things we need to remember regarding God's timing. One, because of his superior wisdom, he calls the shots, and when the time is right, the answer will come. Two, there are commandments he gives us, and until we obey them, the answer won't come. Three, faith is crucial in receiving the answer. Jesus himself said in Mark 11:24, I tell you, you can pray for anything, and if you believe that you've received it, it will be yours. Now, that's a scripture that confounds a whole lot of people that have been Christians their whole life. Let's break it down. Jesus himself said, I tell you, you can pray for anything, And if you believe that you've received it, it will be yours. And you say, well, I'm a believer. I have faith. Now, what did Jesus say in another scripture? We need faith. How much faith do we need? The size of a grain of mustard seed. It's like the tiniest seed of all the plants on earth. Believing, truly believing, is the absence of doubt. So now everything that you've prayed for and believed for, I want you to run it through that filter. Did you believe with 100% absence of doubt? You're probably going to get the sound. Because there's that little part of us that just can't believe with reckless abandon. It's part of our human nature, part of the fallen world in which we live. But just remember, when you confess, I'm believing God for this, that means 100% absence of doubt. The tiniest bit of doubt negates the whole thing. Mark 11:24. That might be a scripture you want to jot down and maybe meditate on today, tomorrow, until it really sinks in what it means to have faith. Just the size of a tiny mustard seed. Because that faith is the absence of any doubt whatsoever. So that's day 1 of You Have Enough. Monday we'll pick up with part 2. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.